Plain and simple, NIO is destroying the battery game, and I'm using that word destroying in the good way, the same way I'm asking you to destroy the like button. In other words, what I'm trying to say is NIO is playing the battery game better than any other electric vehicle company out there right now. I want to dedicate this video to battery talk, why it'll be extremely lucrative for NIO long term, where I see their stock price going, and the battery as a service sphere of NIO. If you're new to the channel, welcome. My name is Nick, and if you haven't already, please go hit that subscribe button. I'd really appreciate it. I do a ton of videos like this, EV stocks, tech stocks, IPOs, everything personal finance. I've said it before, I'll say it again. Hit that subscribe button. Hit the like button for the YouTube algorithm. Without further ado, let's get right into it. So if you've watched this channel before, you'll know I'm extremely bullish on all things EV. I have a current average entry price for NIO at $4.31, Electromechanica of $1.70, and Tesla of $813. If you missed the high valuation surge Tesla has experienced over the past 8 months, I don't think it's too late for you. I think maybe, just maybe, NIO has a chance at receiving a similar fate. I can see them breaking apart from the pack, and in this video, we'll be going over a few of my favorite reasons why I see NIO as really the next Tesla. I personally love electric vehicles. They really align with my values. I see huge potential in them with robo-taxis, with government subsidies. It really is the way of the future. Now, the main cost proportional component of an electric vehicle is its heartbeat, the battery. Now, the battery is obviously the main separation between an electric vehicle and a conventional gas and diesel combustible engine vehicle. With the current technology as we stand, with high research and development costs, the battery can cost up to 30% of the entire vehicle's worth. 30 cents of every dollar is going just towards the battery of the electric vehicle. But this may be changing, and it may be changing very soon. As more companies and researchers are solely dedicating all the resources into researching and experimenting and making new types of batteries, the technology is rapidly advancing, and with this, the cost of batteries is lowering at an exponential rate. Batteries are continuously and increasingly being designed to last longer, be more compact, weigh less, and cost less. In this video, I want to analyze how these 4 factors will relate to NIO's business operations, where NIO is taking their novel battery technology, and how this will relate to their EPS and share price long term. Let's start with lowering the cost of batteries itself. Now, because the technology of the future is, well, in the future still, the cost of batteries still remains high for the time being, relating to a higher cost of vehicle, limiting the number of buyers who are able to financially purchase an electric vehicle. Now, if a company could figure out a way to reduce the price before the technology is caught up, this would give said company a competitive advantage over all of its other competitors. This is exactly what NIO has done in its battery as a service and its swappable, rechargeable batteries. Battery as a service, or BaaS, is where users can lease or subscribe, as NIO smoothly puts it, to a battery, lowering the cost they actually have to pay for their vehicle. The owner owns the shell of the vehicle, but doesn't actually own the expensive battery itself. By leasing a battery and participating in NIO's BaaS unit, which I'm now going to refer to as BOSS, the consumer can get 70,000 renminbi off of the purchase price, along with the national subsidy and a slashed purchasing tax. This can relate to a price for an ES6 as low as 273,600 renminbi or 34,000 USD. This is an incredible price for a luxury electric vehicle. Under 35,000 USD. I feel like a car salesman right now, but it really is phenomenal. This is really lowering the barrier to entry point and increasing the eligible market, flocking an ever-increasing amount of potential buyers to the NIO products. This battery subscription comes at only 980 renminbi per month, or $140. Renting or leasing a battery may sound strange to you, but it actually makes a lot of sense coming from a consumer standpoint, and I'll tell you exactly why. If you've ever owned an iPhone or any sort of cell phone at all, you'll notice that right when you buy it, when it's new and fresh, its battery seems to last forever. However, you'll notice the more times you actually end up charging it, the faster it actually ends up dying each time. If you're a loser like me and don't virtually text anyone, it will still last all day. But if you're a texter, you'll be forced to upgrade on a continual basis. Why is this? Well, the chemical reactions within the battery actually degrade the metal anode and cathode itself. The metals continually decrease in efficiency. There are far less moving components to an electric vehicle when compared to a traditional vehicle, which means that the shell and everything around the actual battery itself holds up relatively well over time. The same cannot be said for the actual battery itself. This would leave you with a valuable shell and pretty much a worthless battery or heartbeat, going back to my previous analogy. Now, because NIO's core component, the battery, can be replaced, this means the car is getting a heart transplant, a new battery on a continual basis. With the battery being leased or rented by the owner if they so choose to do so, this means they aren't losing as much equity or principal as that battery degrades when compared with somebody who's gone with a traditional or conventional combustion engine vehicle or an electric vehicle company with an unreplaceable battery. This directly correlates to a much higher resale value. If you've ever bought a car, you may feel that intensity when actually driving it off the lot. You may have heard that you lose an extreme astronomical percentage of the car's actual value the second it drives off the lot, making it quite daunting to actually purchase a vehicle. This is partially because engines and batteries aren't typically easily replaceable and are therefore on their way to degradation immediately upon driving off the lot. However, with NIO, because owners can, if they choose to only actually own the shell of the vehicle, which doesn't degrade as fast as the battery, the equity within the car maintains an increased proportion of its initial value, making it much less daunting to purchase a vehicle and again lowering the barrier to entry point from a consumer standpoint. The owner can be assured that if they keep the shell of the car in mint condition, it's practically a new vehicle every time they do a battery swap. I think this is going to boast extremely well for NIO long term and may actually set a new precedent for the way consumers and companies actually think about batteries within electric vehicles. Because of the current health situation, many owners' incomes may have been slashed or cut completely. With fluctuations in income, consumers are able to go to these battery swap stations, change out their battery for either a cheaper or more expensive one if they so choose to do so if their income is shifting. If finances become a little more tight, the consumer can go opt for a cheaper battery or enroll in the BOSS option, lowering their monthly fees associated with their vehicle. This gives consumers the peace of mind that they are able to control their monthly fees associated with their vehicles. Consumers also don't need to worry about the battery degrading itself. There is no concern of this upon resale. How long can NIO's battery last? This is undoubtedly the main concern of consumers when purchasing an electric vehicle. Mileage anxiety, or the fear of running out of charge when you're nowhere near a battery charging station, is the main deterrent from people purchasing electric vehicles. The lack of pre-existing infrastructure can also compound this fear into those needing a charge being forced to wait for long, extensive periods of time at the same station in a bottleneck situation. This can lead to extensive lineups and delays. No one wants this, and EV companies, notably Tesla, are building infrastructure at an intense, rapid pace to mitigate this issue. NIO has completely sidestepped or gone around this potential obstacle altogether with their battery as a service unit and rechargeable, swappable battery stations. Consumers can simply go to these swapping stations in under 3 minutes, have a completely brand new, fully charged battery ready to go. The whole premise of actually physically having to be at a charging station to charge your battery doesn't make as much sense to me. Rather than having the batteries already charging, you get there, a robot installs them, you're good to go. This prevents any long buildups and completely mitigates mileage anxiety. Along with the recharging stations, they also have a home charging option akin to Tesla's, typical recharging stations that don't actually swap your battery, and a fleet of recharging vans that will come to your rescue if you do happen to run out of charge on the road. They also have third-party charging stations that are compatible with their vehicles, even further reducing mileage anxiety. All right, so where do we see NIO by the end of 2021? Let's go back to 2019. Their summated net revenue through the entirety of the year was $1.12 billion. 94% of this revenue was actually generated through its automotive division, actually concerned with selling vehicles. NIO is expecting revenue of $1.78 billion by the end of 2020. That's an increase of $660 million year over year. And considering this year was tarnished by the global health situation, this is nothing short of impressive. This high projected revenue by the end of 2020 is thanks to its late year rollout of its most compact, smallest, sleek SUV coupe, the EC6, slated for deliveries later on this year. They are expecting deliveries to increase over 70% year over year. These are phenomenal growth numbers and in my opinion will correlate to an increasing stock price. It's clear right now that NIO's two divisions, the automotive division concerned with actually distributing and selling cars, and NIO Power concerned with all things battery, the battery as a service unit, the swap stations, the infrastructure that goes around that, are completely imbalanced with the majority of the revenue actually coming from the automotive division itself. Looking forward to the end of 2021, NIO revenue is expected to reach anywhere from a conservative $2.75 billion to around $3 billion, with a delta of positive 54.4% year over year, or an additional $1 billion USD in revenue. NIO Power, which currently only makes up 6% of total revenue, or $66 million in 2019, will greatly increase its revenue proportion in the next few years. NIO is clearly pushing the battery as a service branch and really only ramping it up recently, increasing amounts of people who wish to purchase NIOs yet can't currently afford the high price of owning a battery will, in my opinion, opt to go with the cheaper option of buying the shell of the vehicle and renting the battery, generating additional revenue on a greater margin to the NIO Power division of NIO. As battery technology rapidly advances, this division's margins will increase even more, directly correlating to an improved bottom line for NIO and correlate to an increased earnings per share and surging the stock price. NIO is projecting NIO Power and the battery as a service unit to generate $105 million in 2020 and $152 million in 2021. With more NIOs sold and on the road, this division ramps up its actual power. Its profit margin directly correlates to the number of NIOs on the road, and in the future with more NIOs on the road, this division will be able to contribute a higher percentage of total net revenue. I'm planning on doing an entire video dedicated to projecting NIO's future share price according to revenue growth, profit on vehicle sales, BAAS, projected operating expenses, shares outstanding, and hype priced into the stock. To better educate you, the potential investor, so make sure you hit that subscribe button. You don't want to miss any of that. Demolish that like button one more time. I really would appreciate it. It's for the YouTube algorithm and, more importantly, boss. Anyways, guys, thanks so much for watching. I really do appreciate it. Thanks for 2,000. I just hit that today, I think, so that's pretty cool. Anyways, I'll see you guys next time. Cheers.